Yep, well, we know that ArcelorMittal South Africa has been at battle over the last 4 months or so with Kumba Iron Ore around iron ore price proposals put forward by the iron ore supplier, the steelmaker on the opposite end, saying that such price increases would negatively impact on its profitability. With the stopgap measure having been agreed on until next year, though, the company for this half of this year managing to post headline earnings per share of 450 cents versus 190 cents loss a year ago. Earlier this morning, the company's Chief Executive Nonkululeko Nyambezi-Heita took me through what drove earnings in Q2, but more importantly, what's set to drive earnings moving forward.
What we think drove Q2, in fact, was restocking. As you would remember, by the end of 2009, merchants were at very low levels of stock. As prices began to tick upwards in early Q2, they then were forced to go back and replenish their stocks. The biggest question in our minds now, as you rightly put it, is what's going to drive Q3. You look at global markets, and steel markets look quite subdued. Clearly, the Northern Hemisphere also have their traditional slow period in August because of the summer holidays, and it's not clear to us that there is a sufficient and broad enough improvement in the global economy to give us the uplift. So, in fact, the outlook statement that we've put out is that we see a decline in Q3 as a result of exactly what is the engine that's going to drive steel consumption amongst users.
What exactly is your order book looking like as we head, we're already into the second half of this year? Are you confident that that will be built up moving forward?
Well, the reason that we have put out a statement that there is a softening in the market is because our order book is soft. When we got into Q2, at the end of Q1, we were very bullish because our order book was very strong for Q2. We could actually talk very firmly about the outlook. Our order book right now is weak, and therefore we've put out this statement. And as you know, we basically should have a month to 2 months out view of where ordering is, and at the moment it's not looking good.
Well, it's been a tough and rough time the last 4 months or so, having just battled it out with Kumba. Now having come to some resolution that on the face of it looks to have worked in the favor of ArcelorMittal. Are you happy with the outcome that you've reached?
It's a fair outcome in the sense that both teams had to give up something, but to say that we are happy would be overstressing the point. Remember that where we're coming from is on a cost-plus basis, and the cost-plus number that we were on was $30, between $30 and $35. Now, if you look at the numbers that Kumba put out last week, you would notice that they are reported cash costs of mining were $13. So already we have a gap between what they report and what we pay. And on top of that, we also have the uplift as a result of the interim pricing. So no, I would not say that we are happy, but we think that it was a good outcome in the sense that short term, it brought us some stability for us as well as the rest of the industry. We could find a landing post that averted the threat of loss of jobs, which we're facing very imminently had the previous proposal been allowed to prevail. And so there were short-term things that we could do. We could reconfirm that Saldanha can operate economically. But certainly this is quite far from the settlement that we're looking for in the long term. In the long term, we're looking for something that is still cost-based.
Well, looking at that, I mean, how different is the final settlement likely to be come July next year? Or do we take it as a given at this stage that iron ore will be supplied to Arcelor at completely market-related prices? I
would not take that view at all. I would take the view that we would still be pressing our claim to a cost-based solution. It's a critical point, this, because minus that, there's a few other things that fall out of place. So, for instance, let me just take one. We support exporters of steel who have added value to the raw steel that we produce when they export it into foreign markets. So we run this export program on which many of those companies now depend. The whole foundation of this export program or export support program is the fact that we get iron ore at cost plus 3, and therefore we can make those guys competitive in global markets. Absent a cost-based solution, we can't support them. So you're looking at impacts further down in the chain in the economy that are pretty massive. That's the first thing. The second thing is that the whole idea of a beneficiation strategy for the South African government is predicated on a cost-based solution for the raw materials, because think of it, as a country, It is so much better to add value several layers into the chain before you export product rather than export it at the very raw stage, at the iron ore stage. So in my mind, anything but a cost-based solution will be moving away, further away from a beneficiation strategy, which is the stated strategy for the country.
Well, of course, we wait for the outcome on that front. With all of this going on, I mean, as you mentioned earlier, there were threats to close down the Saldanha steel plant, and many have said that that was, pure gamesmanship, in that you had to bring the thing to a head and show that you were serious about it. Some saying it was reflective of the reality. It obviously got the government involved. How serious a risk do we face in terms of ArcelorMittal South Africa pulling out of South Africa?
There is at this point no risk of the group pulling out of South Africa. That certainly has not been communicated by anyone. The group remains committed to its Africa strategy, and South Africa is certainly its primary vehicle to tap into that market. If you look at steel markets around the world, you take it that the US and Europe have pretty much come to a saturation level, and they are on a long-term run rate because they've done their infrastructure development by and large. China is galloping ahead, so Asia at the moment is the big ticket item in terms of growth. Quite naturally, you have to ask yourself, where is the next growth spike going to come from? And Africa is your obvious answer, because Africa is still way behind in terms of development. So you're either going to believe that Africa will stay where it is, or it will develop. If you believe the latter, then ArcelorMittal has got to be the right play for you as a global steelmaker. That's where the next spike of growth is going to come.
When it comes to steel prices themselves, what are forecasts looking like pertaining to that, where we know that fundamentally we're looking at a changed makeup of the cost structure of the business itself, and where we know that we've already seen iron ore surcharges on the domestic sales looking to compensate for that?
Well, look, I think we have also said that we think steel prices will either remain where they are or decline slightly. Now, this becomes quite an anomalous position given the fact that the raw material costs are not declining. So the issue is, if we can't pass on those costs to steel users, where they're going to go. And it's going to be a very interesting quarter this to see how all of these factors play out. But right now, we are not expecting steel prices to massively increase in Q3. If there's any recovery in prices at all, we would expect that to come through around Q4. Now, just touching briefly on the surcharge, of course, this morning we've announced that a separately levied surcharge has now been scrapped. And what we are going to do is to adopt an all-in single price for steel in the domestic market, which will, however, incorporate a premium for the higher iron ore costs. So the basket methodology stays in place, but there's a premium on top that compensates for the higher iron ore price.